MTN phone person me join meeting ni bio.
Charlie.
Already. Okay.
Yeah, so you let's so we are going to just do a little touch of liquidity, then we do market review. All right. So as I was saying, we've been told that every high and low in the market is a liquidity. Every high and low in the market is a liquidity. But then the actual liquidity that causes price to reverse or continue trading to the top or the down. Charlie, why my network? Me, my network say very full in body. Hey,
Be safe.
Charlie,
Yeah,
you.
crash.
Me network in here no longer leave. Are
Drama, sister, some family.
I don't know. I'm saying on fleet. I say you maybe I am on network in here style. Yeah. So, but I want to talk about this thing. I know it's going to give you guys a different perspective about liquidity, and you would love it. So now we're told that every structure in the market is liquidity, all right, which is very true. But then there are some liquidities that are very important because they cause the reversal and the continuation of the market. So sometimes you see market trending up. You see market trending up like this, all right. Then there will be a change in market shift like this. Then after the market shift, you realize that market started after market changing structure. Every pullback, all right, every pullback that the market gives you, it comes from the left side of the market. So what I'm trying to say is that when the market is trending up like this and it changes structure, your focus should not be on this one. Your focus should be on this current structure leg. So they always say that um we should follow trend of the market, which is very important because if you want to make money, if you actually want to see results in your trading, you need to master market structure and follow the market trend. What is the market
Someone
saying?
wants to
Someone wants to do
join or say I don't know.
yesterday to Mr. T, you crowd. Mr. T, you know, so be a bit more join without asking. Okay, for me, shall I refill. Right, so let's continue. So anytime price started creating higher highs and higher lows like this, just know that any reversal happened as a result of liquidity. Already, I've said that every structure in the market is a liquidity. That is what we were told, which is very true. But then, when a market is trending like this, when you are trading with a trend, the actual liquidity in the market is these ones, is the ones that are on this side. Okay, so these are just continuation. So price will just grab liquidity here. Then here becomes your break of structure here. Here becomes your break of structure. Then you see price clearing liquidity. Then after the clear of liquidity, price will just pull back. for the continuation to the downside. And I'm telling you, I'll show you on the chart that anytime there is a break of structure, the liquidity that market sweep before we get the reversal for a continuation comes from this side of the market, this the left side of the market. The same thing applies to a bullish market. So this one we are just focusing on the downside, the bearish side of the market. So always the liquidity comes from the left side here. So whatever thing that every low that was created when we're creating the higher highs and higher lows, every low from that area is a liquidity. But then the mistake that we sometimes do is that because of this whole SMT thing, we just once we see that the market the structure has break, there is an imbalance and all that, we tend to draw our zones. All right, we tend to draw our zones from that end. Then the market will just come. Sometimes it will come, will tap into the zone, give us some small pullback, then it breaks, then it give us another pullback for a continuation. All right, so what I'm trying to say is that anytime markets reverse, just know that price has already price has taken liquidity from this side, the left side of the market, and this one becomes your break of structure. This one becomes your break of structure. This one becomes your break of structure. The same thing applies to an a bullish market. Okay, so once price change intent, what you need to know is that everything here is liquidity. So whatever thing, anything that you see from here is just a break of structure. And sometimes when price breaks structure, we because we know that anytime price breaks structure, a reverse, all right, for a continuation. Once price breaks structure, then we'll be in a hurry trying to take a trade, trying to take a reversal trade and all that. Then we sometimes end up hitting a couple of SLs before the reversal. So you need to know, all right, your break of structure and your liquidity levels in the market. Knowing this is going to help you to know where price is going to reverse. Knowing this is going to help you to know where price is going to continue a trend. And knowing market structure will help you to also know the trend of the market. And I always say, always have a storyline for your chart. All right, what's your daily time frame is saying, what your 4 hour time frame is saying, what your 1 hour time frame and all that. It depends. All right, everybody and the kind of time frame that they use when they are trading. For me, I use only the daily time frame, 4 hour time frame, and the 15 minutes for my analysis, my daily analysis. Then I use the 1 minute, 3 minutes, or 5 minutes for my entries. But mostly I use 1 minute for my entries, depending on um the data that I have, all right, the back testing and everything that I've done. So I'll show you guys on the chart what I'm saying, and you see that it's very, very, very true. But sometimes we just don't understand what we are doing, so we end up hitting some unnecessary SLs. Then after hitting the SLs, your confidence in your strategy, your confidence in your edge, it decreases. Then you start switching. You want to do this, you want to do that. Always, I advise people to stick to certain things like this. You should have a trading plan. You should have a certain time frames that you use. I'm telling you that having a particular time frame that you use as a trader is very important, because sometimes you might not see the trade on the time frame that you are focusing on. Maybe you switch to, let's say you are trying to get an entry, but then on the 1 minute time frame it's not there. But when you come to maybe 3 minutes, you see it there. But because you are actually focusing on just 1 minute time frame, you ignore, because that time frame that you are trying to take the trade is not part of the time frame that you are focusing on. And that one will save you a lot, because sometimes you will see on your 1 minute, you see that no, this trade is not giving me an entry, but on the 3 minutes, it's giving me that an entry. Then you enter the market, then you realize that market will just push to some levels and it will return back to hit your Excel. Don't be like, no, even on the 1 minute, the entry was not visible, but then you force yourself to take the trade because you don't want to be bored. You get it. So when you are in a trade, you become happy. Like when you're in a trade, especially when it's going to your direction, you become happy. So it's very important you get some specific time frames that you trade, specific pairs that you trade, and all that. So with this one, I'm not going to use Euro USD to teach you the liquidity thing. I'm just going to use other pairs. All right. Let me try it and use maybe GBP USD or maybe GBP JPY gold. Let's try it and see if we can find this liquidity thing. What I'm saying, if we can find it on other pairs, so that you won't be like, because I trade Euro USD, that's why I see them. But there are some pairs that you will not see these things very clear then, because some of the pairs, I don't know the chart. Me say if I open the chart, I don't see anything there. I don't know. Some of the charts, if I open it, Charlie, me who the simple. So okay, I've added gold. Let me try it and add GBP USD, GBP JPY. Then we do some little analysis there. GBP USD, GBP JPY. Oh, GBP JPY. Alright, so now let's use GBP USD for our section today. So this is GBP JPY, right? GBP USD, right? Let's go to the 4-hour time frame and look at what the chart is saying. So on the 4-hour time frame, you can clearly see that GBP USD is in an uptrend, right? After price broke above this, price has been trending up, down, up. Then we broke structure to the downside here. This was the last low that price broke. So we broke structure, we pull back, then price came back down, then we changed structure here. So when we change structure here, price has been going up from there. So now let's just focus on this one from here. So this was the last 4-hour leg. All right, so you can see that price was trending up, then we got this pullback for a continuation. So within this leg, we all know that within this leg there are internal structures, all right, which is the 15 minutes. You can find the 15-minute structures there. You can find the 1 minute and 5 minutes and all that. But then they always say that price is fractal. So that's why I was saying that you need to know your higher time frame storyline, your 4-hour time frame, your 15 minutes, your 30 minutes, depending on the time frame that you use. Know what is happening on those time frame. So what you need to do is that the moment you spot your 4-hour zones, all right, mark it there. Mark your 4-hour zones. Don't wait. So mark your 4-hour zone so that you know that, okay, when price comes to this area, this is my 4-hour zones. And on the 4-hour time frame, we are bullish. So there is a likelihood that we are going to go to the top. But then there should be a confirmation for that continuation to the top. You get it? So let's go to 15 minutes time frame. I want to show you the liquidity thing that I'm talking about. So let's go back before price even came to that zone. So once price creates a high like this, all right, a 4-hour high like this, what you need to do is just focus on this one. Focus on this leg. Read structure within that leg to know the last low and where the change of character happened. That will help you to know where price is heading to, because sometimes we make mistake reading these things. So this is 15-minute time frame, and 15 minutes can be bearish whilst the 4 hour time frame is bullish. The daily time frame can be bullish while the 4 hour time frame is bearish and all that. So you need to know the difference. And before price will come to a particular zone on the 4 hour time frame, the 15 minutes, the 30 minutes, and all these lower time frame need to structure has to form on these time frames before we come to the 4 hour zone that you are looking for a trade. So clearly you can see that here, this was the pullback, right? This was the pullback that caused this break. So here was the break to the top, right? So the 4 hour time frame here was the break of structure. So from there, we had price doing this, 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 this one. We broke structure here, we pull back, then we broke structure here. Okay, again. So on the 15-minute time frame, for me to know that price is likely to come to this area, price has to break this one. It has to break this leg, which I know a lot of us already know these things. This is not a new thing. We know. So price has to break this thing. Once price break this structure, what I have in mind is that, okay, once price breaks this, then there's a likelihood that price will come to these areas for a continuation. But then just know that we know that these lows that have been created here are liquidity levels. So price can also come, you can just break the structure here, pull back like this, come, then take the liquidity. After it takes the liquidity, then it push to the top. So there have been instances where people will be like, oh, I marked my zone, but price did not come to that point. Okay, so just know that if price failed to come to that your zone, then it's either price clear some liquidity, then after the clearing of after clearing the liquidity, price decided to do whatever thing that he wants to do. The market is always right. It's up to you to follow your rules. Never think for the market. Trust me, the worst thing that you can do to yourself as a trader is thinking for the market. Oh, I think price will go to this place. Oh, like I know price will go to. If you do that, you will regret that thing, because at the end of the day, price will do whatever thing that he wants to do. Then the more these things happens to you, you tend to lose confidence in whatever thing that you are doing. So don't ever think for the market. Just have a rules, then follow those rules strictly. I'm telling you, you will hit some stop losses, but then definitely you get some winning trades. As far as your strategy is very good, as far as you are following the trend of the market. So on the 4 time frame, we're bullish. Once price broke this structure, all right, I know that we are bearish, all right. So price is likely to come to these areas. But then before price will come to these areas, don't forget that we have these liquidities there. Okay, but then let's see. So before price coming to this area, let me show you this. Price was just doing higher, um is it lower low, lower high, right? Then we got this break. So anytime price break structure like this, what I'm expecting is price to take a liquidity level before it will pull back. So you can clearly see that from here, from this break of structure, I'm taking my time to explain this thing. From this break of structure to the downside, this place was the liquidity, because here is the only low that is very close, um the only low after the break of structure. All right, so the one that is very close to it, that is where my focus will be. So for price to break structure, I would expect, after price break structure, I would expect price to clear this low as my liquidity before the pullback. But here is the case: price came, instead of respecting, it just respected the zone there, and it pulled back. Then after a pullback, we got a reaction from here, which is a mid Asia zone. All right, we got a reaction, then we pull back again. So after this break of structure, we are just focusing on the internal structures from here, from this leg. After this break of structure, see what happened. After the break, here remains the recent liquidity. But because this zone was coming from an Asian low, which is an inducement, right? Any zone that is within the Asian low or Asian high, is there is a likelihood that price will clear these zones. From my experience, from my back testing. So sometimes people will see me marking a particular zone as SMT. They will be asking, when I post trades on maybe my status, you will see people asking, why do you mark that zone as your as SMT? Then I'll be like, okay, because it's coming from an Asian low or Asian high. So most of the time, zones that are within Asian low and Asian high are being taken out by the market from experience, from backtesting and all that. So I don't know if some of you use this timing and this session thing on your charts. It's very important. So already I know that this is an SMT zone. All right, this is my SMT zone. But then my focus is on this liquidity. And because it's an SMT zone, I know that price is likely to take it. But it doesn't change the fact that it was the last low that price need to break before we would get that um 15 minutes change of market intent to the downside. So you can see that after price broke structure and it took out this liquidity, it came back down to take out this liquidity as well. Then after taking the liquidity, it pulls back to a certain levels in the market for price to continue to the downside. All right, so that one is up to you. Where you find that your zone, that one it's up to you. That one there, I can't tell. So you can see price came back, then it tapped into this zone, then it started going back down. Now after price broke structure, now our focus is on the bigger picture right now, because after price change intent, this is how price is saying this is it. This is the last low, this is the last high, and this is the break. Okay, so after every break, price has to clear some liquidity before we'll get a pullback. And let me show you something. Price broke structure here. Price broke structure here. All right, then it cleared this small structure in liquidity here. Always I mark the obvious ones. So if it is not obvious, I'm not even marking it. So price just took out this liquidity, because sometimes we come into the markets, we see price reacting from a particular level, then we are confused. We don't know why price is reacting from there. And I'm telling you that price just took out this liquidity, this small low here, then it gave us this pullback. So after the pullback, maybe you would want price to come to maybe these zones. All right, you would want price to come to these zones, or maybe any other level in the market. Those who trade breakout block and all these things would maybe expect price to come to levels like this. But then it is what it is. For me, I would expect price to come to this top like that. So after price took out the liquidity, it gave us a pullback, it reacted from these levels. Then it continued the break. It continued the trend. All right. So we got a break of structure here. See, you got a break of structure here to the downside. Price took out the liquidity, which is this one. This is the next low to the break of structure. So price took out this liquidity. Because this level was very close to this one, price took that one as well before it started pulling back. Okay, so you will see that anytime price takes liquidity, it gave us a pullback. It gave us a pullback. So there are times that price will take liquidity and you will find a zone below the liquidity level that price is taking. Sometimes you will find zones there, price will tap in and it will start going up. right? Especially when you are trading the JPY pairs and other those other pairs. I've seen those things happening. Sometimes you will find a zone just below the liquidity level. Price will come, it will tap in, then it starts going. But then that is not the reason why we are here. So see, this one was all even a trend line liquidity, but then I'm just showing these things. Price just took out the liquidity, then it pulled back. It came back to react from this zone, which is an SMT zone for me. So for me, I will not be putting um my limit or anything here. Even though I know this is the last high that price need to respect, but because it's coming from an Asian zone, me I will not. I'm telling you, I will not take this trade. I will not take this trade. But then, as price is coming down, I know that for price to reverse, there is a likelihood for price to take out this liquidity level first. All right, price has to take out this liquidity before it will reverse. But then this is what happened after the break of structure. Price failed to take out the liquidity. Remember, I told you that price can do whatever thing that he wants to do, but I'm giving you something that I've seen it happening over and over again. So now price broke structure. Instead of taking the liquidity, it failed. It just reacted from there, then gave us a pullback. After the pullback, price broke structure here. It took out the liquidity and tap into our 4-hour time frame zone. All right, and tap into our 4-hour time frame zone. So price took out the liquidity and tap into our 4-hour time frame zone. So after price took out the liquidity, it give us that confidence that okay, already we are expecting a buy trade from this. But then price coming into that zone, tapping into the 4-hour time frame and taking that liquidity is also giving us that vibe that price is likely to respect this zone and go to the top. All right, and continue to the top. So that is my perspective. Okay, now price came to the downside after taking out the liquidity. It pushed further to take out these levels. All right, this Asian low, then it started going up. It started going up again. Don't forget that because of this break of structure, this is our last low. So for us to get a confirmation that price is actually going to go to the top, we have to break this thing. We have to break this high. Okay, we have to break this high. And if we break this high, our next liquidity is this place. Okay, our next liquidity is this place. So here is it. Price came, all right, it came, it broke this high, it broke this high. After taking out this liquidity, a pullback, it came to respect these levels, then it pushed up again. Don't forget, from the internal structure here, here is a break, here becomes your liquidity level. Okay, after price breaks above it. Okay, after price breaks above it, here becomes your break of structure, then here becomes your next liquidity level that you would expect price to at least clear that liquidity before you start pulling back. But price just came, reacted from these zones, then it started coming back again. Now, see what happened. From this internal structure, from these internal structures, all right, this was a break. So after this internal structure break, we know that price is coming back down for a continuation of the bullish trend on the 15-minute and on the 4-hour time frame, because already we've taken out this high. Okay, so from the internal structures, here was the last low. So price broke the low. Price broke the low. Our next liquidity level was this place, this small line here. Price took the liquidity, then it gave us a small pullback, reacted from this level, then it came back down again, broke structure here, internal structure here, all right, which is a break, then it took out this liquidity. After taking out the liquidities, look at what happened. After price took out that liquidity, it gave us this pullback again to the top, reacted on these levels, then it came back down again. When price came back down, it broke this structure, all right, to the downside. Then after it broke that structure, it took out the recent low here, which is the liquidity level. Then after taking out the liquidity, price started going up, giving us a pullback. It gave the pullback, reacted from here, it came back down, then we broke structure to the top. But then don't forget that internally, this is what price has been doing. So that will give you that confirmation that internally price has been doing this. Let me use sizes so that it will make more sense. So internally, structure has been doing this. All right. So here becomes a break. Here becomes a break of structure. Then here becomes your next liquidity level. So price took out the liquidity, then it gave us this pullback, reacted from here, then it pushed to the top again. So, but don't forget that on the 15-minute time frame, this is the last high that has been created. So a break of this high, right, means that this is what price has been doing on the bigger picture. So as you're looking at the smaller time frame and all these things, don't forget the bigger picture, because that one will also help you to know where price is likely to react from, where price is likely to reverse and all that. So don't forget the bigger picture. It's very important. So now price took out the liquidity, then it reversed. It came to respect these levels. Already, this is giving us a change of intent vibe. Okay, because already price was just giving us this higher high, higher low, lower low, lower high. Then it gave us this lower low, then it break. So it's giving some kind of change of intent internally, even though you are seeing this structure on the 15-minute time frame, but the actual 15-minute time frame structure is this one, these legs. All right. So this is where the confusion comes in, where people started misinterpreting the market and started thinking, okay, price is not coming down, price is going to react from here. They know that. So you ended up hitting some excels, then you start breaking your rules. So make sure you master market structure very well. It's very important. Market structure is very, very, very important. So it helps you to know the mistakes that you are making in the market. It helps you to know whether you were trading against the trend, or you were not actually understanding what price was saying. So this was a change of intent from this internal structure move. So it's likely that price is going to continue to the top. Already we are bullish here. We are bullish on the 4 time frame as well. So price just came and reacted from this one. All right, this zone here, and a push to the top. So now price broke structure here on the 15 minutes. Price broke structure on the 15 minutes here. But then don't forget that price also breaks structure here, making this high a liquidity. So if you take a trade from this place, you can clearly take profit around this level, because once price break this high, you know that this high is serving as a liquidity already. This is also a high that you are expecting price to pull back and take it. So that is it. So after a break of structure, here becomes my next liquidity level. Always choose the recent ones. All right, the ones above it. Don't just be thinking. Don't try to say, okay, looking at how price is doing, maybe we take this one and it will take this one. No, just focus on the recent ones, the one that is very close to the break of structure. Focus on those ones. So this is our liquidity. So once price took out the liquidity, I'm expecting price to reverse. But then don't forget that there's some liquidity here that price push up, but then it failed to take these levels. If price was able to take any of these highs, it will give me more confidence that we are going to reverse. All right. Already we've taken liquidity here, which is a confirmation that price is likely to reverse. But then if price took out this, all right, it will give more confirmation. But so here is the case. Price just pulled back. It, it broke below this. then it breaks structure here. It was giving a bullish intent here. Then now price just switch. It broke this downside movement, reacted from here. Then it started coming back down for the pullback. Now, this is a pullback. This was the a pullback. So those who trade a breaker block and all that, they might draw their zone from here. Some people also use indecision candles as their zones. Okay, so those who use indecision candles as their zone might maybe they will just mark their zones from here. Those who use flip zone, so you can see that here price reacted from here and it flip it, so there is a zone here. So I always see price markets always will give you an opportunity depending on how you trade, depending on how you read price. So you should have specific things that you want to see and trade it. Don't complicate things. Just keep it simple, just like that. But then within these internal structures, let's see if price was so this from this internal structure, price broke this, it came back to react, then it breaks structure to the downside. There was no liquidity here. The only liquidity that we had was this one. Alright, was this one, but then it was not very close to it. So price just and already we know that we were expecting price to just pull back then continue to the top. Okay, so from here, price was just creating higher, lower high, lower low, lower high, lower high. Then there was a switch here. Okay, there was a switch. But don't forget that if you are looking at sizes, here, 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 here will be the structure. So this place will be the structure here. So here will be the last zone. Alright. Then, but then if you are looking at the internal structures within this leg, alright, within this leg, if you are looking at the internal structure, then it was this, this, and this. So once price breaks above this, you know that we are likely to price is giving us a bullish intent. But in the moment price breaks here, you know that yes, we are fully going because price are giving a true confirmation that we are going to go to the top. Okay, but then let's see. I want us to check something. So from this structure here and this, you can see that internally we also having this. All right, but then price broke structure here. It broke structure here. All right, here becomes our next liquidity. Price took out the liquidity and in reverse. So after price reverse, it came back to react from here and give us a push to the top. See the funny thing. Don't forget that this thing is a whole structure and this is a pullback. Price came, then after it broke this structure, it took out this high that we were expecting price to react from, which price reacted from. It took out this high as a liquidity, whilst this one becomes your break of structure in the internal structure. All right. So once price broke this, I know that okay, price has taken out this high. So now here becomes my breakup structure. I will just leave the internal structures and everything and focus on the bigger picture, right? So in the bigger picture here becomes my zone, which there were internal structures also within this place that gave this trade, all right, that confluences because see, internally we're having this, all right, and this price just broke structure here. It took out this liquidity. So after price took out liquidity, it's giving that vibe that price is likely to reverse already. All right, price has broken up here, which you are expecting price to go up. Price has taken out this liquidity after the break of this structure, and you have your zone here. You just put your limits, then price just came back, tapping, then it started going up. So when price starts reversing from a particular level, you can clearly read structure and know that oh, it's because of this reason, it's because of this, it's because of that. That's why price is doing this. Okay, so if we are focusing on this leg, you can see that internally price has created this structure here, this, this, and this. And most of the time, when the break of structure um is very close to where you want to make mark as your liquidity, price is likely to push up more, especially when there is a liquidity level that is very close to wherever um you want price to reverse. All right, so let's see. Price just broke this structure. We are still sticking to our rule. Here becomes our next liquidity level, but then price also decided to push up more to take out this one. But even if you look at this, you can see that after price took out this liquidity, it reacted from this level, a pullback, a break structure here, it took out this liquidity, a reverse, a break structure here, then price came back to react from these levels for a continuation to the upside. All right, price just came back to react from this level for a continuation to the upside. Okay, so already we are bullish. Here give us a break of structure, which is a bullish intent. Now, let's see something. Price broke structure here. Here becomes our liquidity level. Price failed to take like liquidity. It reacted from this on the pullback. It gave us a push again. Break structure. Then it took this liquidity. All right, it took this one. It took this liquidity. Then it started coming back down again. So when price was coming back down, just know that on the 15-minute time frame, on the bigger picture, this is how structures have been doing. So don't just see a small switch in structure and just decide to trade against the trend. Already, this is how the trend has been. All right, it's actually respecting the 4 hour time frame trend. 4 hour was bullish, 15 minutes was bullish. So these internal structures are just there to sometimes confuse you, sometimes give you some different perspective about the market. So it is up to you to read structure very well. You need to master market structure. It's very important. And you can see that as I'm reading all these things, I've never focused on whatever thing that happened on this left side. Like me trying to draw zones and take trade from these levels and all that. Even the price reacted, but me, I don't trust these things. I actually don't trust these zones. So you see that I never mark any zones on all these things. I'm just focusing on what the trend is saying and what price is actually saying. So there are some losses that you take, you know that this is a valid loss. There are some that you take that I know that Charlie, this one day, it be me now I mess up. You get it? So price broke structure, took out this liquidity. That is giving a vibe that price is likely to come to the downside. So it's up to you to know where you mark your zones. That one is up to you. How you pick your zones, the things that you look out for before you pick a particular zone or all that. So price just came, reacted from here. Alright. Price just came, reacted from here, then it started going up again. But then internally, don't forget that there are internal structures there. We have this push, then this push to the downside. So here will be a break of structure. Alright. Then here becomes my next liquidity level that I will expect price to take. And you can see that after price took out the liquidity, there was a reversal to the downside. In fact, price took out this liquidity and took out this one as well. After it took out the liquidity, there was a reversal to the downside. Price reacted from this level and continued to the top again. All right, and they continue to the top. So these liquidity levels helps you to know where price is likely to reverse. Okay, it helps you to know where price is likely to reverse. And if you are somebody that understood lower time frame intent, lower time frame, how to use your 1 minute and all these things, you can be taking advantage of these reversals. So sometimes you see some traders, right, having a whole lot of entries and all that, and you see it and like, nah, this person is just faking it. This is not real. This is not true. It's up to them how they see market, how they read market. So imagine this, because I know that price, anytime price takes liquidity and all that, it reverses and all that, I can be taking advantage of these internal structures these reversals trades. All right, it can be, you can see somebody taking a trade here, taking advantage of these things, price coming back to this and all that. But just know that if you are doing these kind of things, you will chop SL more, but then your reward will be more. But it is what it is. So now, price broke structure here. Price broke structure here. All right, here. But then because I use I use sizes when it comes to marking my zones and all that. If we are following strictly what structure is saying, here will be the last low. All right. If I are following strictly what structure is saying, here will be the last low. So I know that on a 15-minute time frame, after this break, we got this break of structure. Here becomes my last low that I'm expecting price to react from. So if I take a buy trade here and price reverse back to take me out, I have not taken a wrong trade because I am following what price is saying, and price is telling me that we are bullish. 4 hour time frame is telling me that we are bullish. But then what you forgot is that price has already taken out this high, this 4 hour high, which I am very sure that when you go to the left side of this market, you might see price taking out a particular liquidity from that area. Then before it starts reversing to this, to the downside. But I don't forget that on the 15 minutes, we are still sticking to what we are doing. Price, this is the last low that was created. So once price breaks below this, all right, once price breaks below this, you know that there is a likelihood for price to come to the downside. But in as much as we are expecting price to come to the downside, don't forget that everything here is also liquidity, and price can just come back, maybe clear this level, right? Clear this liquidity, that start going up again. It's not by force for price to just come and respect all these 4 hour zones. So this is our 4 hour zone. All right, this is our 4 hour zone. When we go to the 4 hour time frame, let me try then switch to the 4 hour time frame so that everything will be very clear for us. So on the 4 hour time frame, we broke structure to the top. Here becomes our zone. All right, here becomes our zone. See, for me, when I'm marking a zone, I use a body break. I don't just use, I'm not saying that follow whatever thing that I'm saying, no, but I'm telling you what I do. That's why I'm not saying whatever thing anybody is saying. I'm just speaking from my perspective, how I see things. So maybe how I see things might be different from how you see things. So that one is up to you, whether you make some changes and all that. So they said mark your zones from the last bearish candle, but you can see that this is the last bearish candle. But then the next candle after the bearish candle was this one. This one did not break this one with a body. This one did not break this one with a body. This black candle with a body. So I would not consider that as where I'll put my zone. So this one, the second one too, was not able to break with a body. It actually break, but then it broke with just a wick. So I wanted to break with a body. So it was the third one that broke with a body. So you see that price just came and then tapped in there, then it started going up. But then let's see. Let's also reach structure from that point. Then I will switch to other pairs. Then we try and see if what I'm saying actually works on other pairs and all that. Then maybe we will end it, or we'll do some few markets review and end it. So now I don't know if we are actively listening to what I'm saying, or all of you are not on the call. Oh, okay, you guys are on the call. I thought you guys are not on the call.
Baba, we are here.
I hope you guys can hear from me then.
Yes.
Me, now your network is not good, but I'm trying my best to record it so that I will send it to you guys, whether in the form of YouTube or something,
Oh, thank you.
YouTube video or
Thank you.
something, so that you can just refer to it. The network is very slow. The network is very slow, but no problem. I'm recording whatever thing that we are doing. So okay, there is no message there. Now, so let's continue. So now on a 15-minute time frame, here was the break. All right, here was the break to the downside. So once price broke this, I know that the bullish intent on the 15 minutes has changed. The story on the 15 minutes has changed, but on the 4-hour time frame, we are still bullish. So it is this that is going to give us that continuation of price and market structure and all that. So now, price actually broke structure here, and when price broke structure, I know that my next liquidity was this one. My next liquidity was this low here. So what price did was, after price broke structure, it took out liquidity. Price decided to come push to the downside more. It broke out this level as well. Then after it cleared this last liquidity, all right, it started reversing back. So after it cleared that last liquidity, price decided to reverse backward. So now from the top here to the down here becomes your one leg, right? A full 15 minutes leg. So price just decided to come, then reacted to this 15 minutes mid Asia zone. Then it continued to the downside. Now let's see something. After price was continuing with the direction of the market, we broke this structure here. Here is a break of structure because here was the last low that price created before giving us the reversal. So price broke structure to the downside here. Then it took liquidity here. It took the liquidity here. After price took out the liquidity, see what happened. We got a pullback. We got a pullback. So we got a pullback. Then there are times that people will be like, okay, this is very close to this, so they are waiting for price to take out these ones before they will take it. They realize that price will just take out this liquidity and reverse. Always just know that the recent ones are the liquidity levels. Just know. Just know, even though sometimes price will like to take multiple liquidities, but then just know that the recent ones are there. So now, here becomes our zone, all right? Here becomes our last zone, all right? Here becomes our last level that we would expect price to just come tap in, then we continue to the downside. But you can see that here price change intent here. Price actually change intent here. Okay, price change intent here. And you can see that even from this leg, we had this pullback, price broke structure, it came back to take out this high, which we were expecting price to respect and go to the downside. But you know that these wicks sometimes price take these wicks, right? So marking this as a liquidity was cool, but then let's just focus on what price is saying. So on the 15 minutes, here becomes our last high. Price broke to the top, all right, which is giving us some bullish vibe. Some bullish vibe. Okay. Then after price broke to the top, it took out this liquidity. After price broke to the top, it took out the liquidity. Then see what happened. After the liquidity taking a reverse. Alright. Then price reverse. It broke structure here. It broke internal structure here. Then it took out the liquidity here. And a reverse. See. Price took out the liquidity here. And reverse. You get it? So these things happen. It happens almost all the time. So after the switch, after price also switched the bearish intent again, right? After price broke structure here, what I will be expecting price to do is that I'll be expecting price to take the next liquidity level, which is this one. But then price just took out this liquidity, all right? It took out this liquidity, took out this one as well. Then once price did this in a very sharp moment, I know that we are going to reverse. Already, we are already tapping on the 15-minute time frame, on the daily time frame, sorry, 4 hour time frame demand. So it happens. So price came back, reacted from here, it gave us a pullback, then it started going up again. But don't forget that internal structures was giving that kind of liquidity vibe. See, internally we had this. Sorry, I'm coming. So we had this one. We had this push to the downside, this push to the top, the downside again. Okay, looking at sizes. That's why sometimes I talk about these sizes thing. So here, we break structure, then price took out this liquidity here, internal liquidity here. Once price took out the liquidity, it started reversing back to the top. Internally, we had this structure break. So once price broke this structure, here becomes minus liquidity level. Price took out the liquidity level and reverse. So once price took out the liquidity level and started reversing, already this internal structure is giving us a bullish vibe already. But then what we are expecting price to do for us to know that price is going to continue to the top is for price to break this high, because this is the 15-minute internal structure saying, what is the 15-minute bigger picture saying, all right? So now price broke structure, it took out this liquidity, it gave us a reversal, it reacted from this level and started going up again. Here becomes our break of structure here. Price took out this high liquidity and it gave us a reversal, it reacted, it started going up. It break structure here, it took out this liquidity and reverse. Alright, took out this liquidity and gave us this sharp reversal to the downside. Then we broke internal structure here, we started continuing to the top. So already the 15 minutes has given us a bullish intent here, all right, after we broke above this. But then see something, 15 minutes breaks here, becomes the high, then we have this push here. So here becomes the last level. So the stop loss that Collins chopped last week Friday also, it was invalid, because if you are looking at structure was like this. All right. So price came back, instead of respecting the structure, it just broke through it. Then it started giving that bullish sign. So now, because of this break, here becomes the next level for looking for itself. But because this is coming from an ancient zone, me like this, I will not be expecting price to actually react from there. But already we have already taken this 15-minute, this 4 hour zone. So you should know that this 4 hour zone has been taken out. So this thing that I'm seeing, it works on almost all the pairs. I've seen it happening on most of the pairs. So let's try some few pairs, then we will end everything. So here that we are trying your favorite pair, that pair that has given you broken hearts. It has given you broken hearts. And you keep saying to yourself, I'm not going to trade gold again. I'm not going to. I'm giving gold some time. I'm giving this.
What's happening? What's happening?
I'm giving gold some time. Are you giving
Oh,
gold some
no, yeah,
time?
I can't give good sometimes. I'm
Are you
just not
giving
found
gold
any
some time, or
opportunity.
is gold that is giving you some time?
We are still facing it. Very day.
Yes, so you can apply these things, and it will help you. Trust me. So last week I saw a lot of big traders cashing out on gold, big. But because for me, I don't trade gold, so I just I just J my eye. So I saw a lot of people marking certain levels in the markets. I saw a lot of people marking these levels. It's like crazy. So on the 1 hour time frame, this was the last low. So on the 1 hour time frame, this was the last low. Here was the internal liquidity sweep. Price actually tap on this level, right? Then it started going up. Someone who also used this whole thing as the level, then it started going up. So these are some of the things that happened. So now price just, I saw this thing happening here. Price just tapping here, then it started going up. But let's go to the 15 minutes so that I'll show you guys something. So last week there were a lot of trades. There were a lot of trades on gold. But then depending on how you see markets, so internally we were having this push, 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 and push, right? But then if you're looking at structure here, you see you have this and this, which is, so for me, I know that the moment price breaks about this, then there is a bullish switch. But then let's see if we would see what we've been learning there. So you can see that price created this low up, then we broke this high on the 15 minutes. After price broke the high, see something. Here is our liquidity. Price took out the liquidity and see what happened. Price reverse, came back to respect some of these levels, then it started going up. Now see what happened again. Price broke structure here, then it took out this liquidity, right, which is the 15 minutes break of structure. So price just took out this liquidity, and after taking out the liquidity, see what happened. Price reverse. Let me show you something. Price broke this structure. The thing is even funny to me. Price broke this structure, then it took out this liquidity, right? It took out this liquidity to the downside. After taking out the liquidity, price started going up again. You see, so I saw this thing happening, but then depending on how you see price, that way. So we broke structure here. My next liquidity level was this high, but then price did not come there. So price just decided to pull back after the break of structure. So after price pull back coming, I know that here becomes a break. All right, here becomes my liquidity. So that one, it's up to me to know where I'll mark my zones and all that. So that was it. Price just came, reacted from these levels, then it started going up. You get it? So now after price reverse and going up, just know that the 15 minute has been creating higher high, higher low, higher. Okay, so price just broke above this. It broke above this, then it took out. In fact, internally, this was also a liquidity level. See something. We had this push to the downside. We have this thing. So price, this is a break. This is a liquidity. So price broke, then it reversed back to the downside. But then internally, when price was coming, I know that this was my last. This was a break. This was a liquidity. Price sweep the liquidity, tap into these levels, then started going up. Price was coming down again, but then internally we had this switch. All right, so price just broke this internal structure, broke this structure as well, which was a liquidity for this zone, a liquidity for this break. Then it came back to respect the trend, which is this one. Then we got this push to the top. So after price took out this, after price broke this structure,
Mina has raised their hands.
see
I
what
think
happened.
she has a question.
Price took
Mina
the
has raised
internal,
their
these
hands.
liquidities. Price
Kwesi,
took out the liquidity, took out this PBP
hello.
high as well. Then it
Mina
started coming
has
back
raised
down.
their hands.
Then it came back to react from here. It came back to react from here. Then it started going up again. Price going up. We broke structure. Broke structure here. Here is my liquidity. Price took out the liquidity, gave us some small pullback. Then when the Iran and one fights started, everything started going up again. That where Hilda you got that GBP JPY or something trades. The same thing was happening on GBP JPY. Let me
Yeah.
check. Is this GBP JPY? Yes, the same thing was happening on GBP JPY. I already have my markups on it already, safe. So you can see this one was creating higher highs, higher lows. We broke structure here. Price was creating higher highs, higher lows.
Mina
Broke
has
structure
raised
here. We
their
took out liquidity.
hands.
Price reverse. We broke structure here. Price took out liquidity.
Can you both
Here,
hear me?
price
James.
started reversing. We came back to respect this zone. We
Hello.
broke structure here. We took out this internal liquidity.
Ah,
Price
There's a
reversed.
question in the
Price
one
started coming
tissue.
back down to this. So we
ah,
broke structure
Motineka.
here. We took out this
Mete
internal
one
liquidity.
kapa.
We took out this liquidity as well. Then we started pulling back. This was Hilda your
Mayere
trade.
say,
This sell trade here. Then price broke structure. So price broke structure here. Here becomes my internal liquidity. Price took out the liquidity, took out this one as well. Then it gave us a pullback, right? So when we're coming to this zone, this was where you took the buy, then you hit SL. But it was just a valid loss. Because if you are looking at structure, here was the last low. So price actually broke above this. It took out this liquidity, then it gave us a pullback. Now, when price gave us the pullback, it came back to respect here and it started going up again. So I don't know. From structure, the market has reached bullish
Mina
at the
can settle
15
from why?
minutes, but I can't tell,
Mate.
right? How it depends on how you read structure. It depends on how you do price.
Mani,
The
we are
same
near
thing
this and
happened on
why?
the UUSD last week. The same thing happened. Price takes liquidity, you reverse, take liquidity, you see it reversing and all that. So that is what I wanted to show you guys about this liquidity thing. It happens on most of the pairs. Now I've said it that this liquidity stuff helps you to understand what price is saying, know where price is likely to reverse, and if you follow strictly your market structure, right, you hit some SLs, but then you would make some profits. Bear that in mind. You hit some stop losses, but you would make some profits. So don't forget that people actually feel like because they have a working strategy, they should win every trade. Losses are part of the game, and losses are not, you cannot avoid losses, it's inevitable. So just make sure that you are following a strict risk management, you are following a strict rule, you know that at the end you'll be fine. Even if you are not fine, the market is not yours. So you better be fine. So that is what I wanted to show you guys.